Hi, everybody. This is Elijah Shong from Remax Excel. The very exciting news today. We have the CEO of Calibrate Mortgage here to talk to us about the biggest news today is the interest rate increase. So I would like to introduce you, Bredy Leow.
Hi everyone, how are you? My name is Bredy, and I'm the owner and director of Caliber Mortgage. And we have about 35 agents in the brokerage right now, and we are one of the fastest growing mortgage brokerage in GTA right now. And we are very focused on helping clients to get qualified from TD Bank, Scotiabank, A Bank. And obviously, I'm here today to help answer everyone's questions.
Yep. So I guess you might already have heard the Bank of Canada increased a 50 base point. That means it's a 4.5% increase of the overnight rate. So right now we are the expert here. I would like Brady to tell us about what would that affect on the mortgage lending with this increased interest rate.
Okay, so first of all, I think most people should already know that the qualification for getting mortgage is the debt to income ratio, and the debt to income ratio is based on what they call a stress test rate. Basically, whatever rate you can get from any bank plus another 2% on top. That's how they calculate the liabilities and the expenses and whatnot. So right now, because today the Bank of Canada announced another 50 basis point increase, obviously that will have direct impact on the mortgage amount able to qualify because the stress test rate is higher right now. So that would be a slight impact on that. But just so you guys know, different banks, they actually have different underwriting guidelines. I do have some banks that they are only taking the contract rate instead of the stress test B20 contract plus 2% rate. So there are so many different programs out there. All you need to do is to ask first.
Okay, that's great. There's another question that a lot of people already have because most people, I should not even say most, some people already have their mortgage under a variable rate. So
Mm-hmm.
with these increases, they are really afraid that their monthly payment may change. That do
Mm-hmm.
they change or do they not change?
Depends on the bank. For example, Scotia, they change the monthly payment every time when there's a rate differences. So every time rate increase, they change the monthly payment right away. But TD doesn't, right? So it really depends on which bank it is. So when you actually have a bank that they don't change the interest rate, what they do is they are going to adjust the principal to what the overall balance and affecting the amortization at the end. But Scotia, they don't want to affect the amortization. That's why they change the interest rate accordingly. I mean,
Oh,
change the
that's
payment accordingly. Yes.
okay. That's really great because that's a relief for some people. So I
Mm-hmm.
have two more questions. Yeah. So for people that are having a mortgage renewals coming soon or people are getting a mortgage, what would you recommend right now at this moment? A fixed mortgage or should they get a variable mortgage?
Personally, I still believe that variable rate mortgage is actually a better route right now because what I see is that the interest rate is I'm not going to say that it's at the peak right now, but at least it's in the peak range. So right now, if you lock in at a high range, that actually takes out a lot of flexibility and the potential of they're going to lower the rate maybe 1 year, 1.5, 2 years down the road. Then you actually don't have that flexibility to take that advantage. So what I see is that it actually makes more sense if you lock in the interest rate at the rise, not at the peak. That's how I look at it. So me personally, I still recommend doing variable rate. And when they actually start readjusting the rate going back down, you can actually reduce your rate as well together as the market goes down.
That sounds like really good plan. Yeah. So for right now, there are some buyers that is thinking of buying, taking advantage of the price drop. So for those buyers, what would you recommend? Like actually, I would say recommendation is more like what that step, what should they do right now at this moment?
Mm-hmm. First of all, I think most people they don't know me, and what I always tell my clients, my partners, I always tell them that, you know what, you don't have to trust me, but you should trust the math because the math doesn't lie, right? So what I see right now is that even though the interest rate, including today's rate hike from the beginning of the year, they actually increased by about 3.5%. But selectively, based on different location or different bucket of the market, some properties are actually in the dip of about 15 to 20%. What I see is that those 15 to 20% most likely is the bubble. Because before there were so many people, so many bidding wars, so many competition, and that inflated the market by about 15 to 20% over the normal pricing. And right now, because of the rate hike and whatnot, that bubble is kind of eliminated. And right now, the price is actually get back down to the normal fair market price. So when you take a look at that, if you can purchase something that is about 15 to 20% below the expectation, even though the interest rate increased by 3.5%, who is the winner there? You save 15 to 20% of the market value compared to you pay 3.5% interest on top. I would say usually we do that as a carrying cost. We look at that as a carrying cost. 3.5% increase, that's a carrying cost for buying some properties that is 15 to 20% on discount. And one more thing, don't forget, a lot of people, if they're actually buying properties for investment or whatnot, all those interests are tax deductible. So if people, they're making like $150,000, $200,000 a year income, who is actually the main majority of the income range for purchasing investment properties, after tax deduction, that 3.5% maybe comes down to maybe only 2% difference because you can actually write off tax. So if you can actually have a 2% carrying cost to buy something that is 15% on discount, why not?
That's true. Sounds good. I guess for people that are thinking of buying, I think the first step is to talk to you to about the math and then get a pre-approved mortgage. Is that correct?
I would say so. Like people that knows me, they know that I always give people unbiased advice, and I always help people to run calculation and make sure that everything is transparent. Because people lies and math doesn't. So I always tell people that, you know what, let's run some numbers together. If it makes sense, then it's good. If it doesn't make sense, no problem. Find another solution.
That's excellent. Thank you so much for your time. These are all my questions. So to my audience that watching this video, if you have any question regarding mortgage, I will have Brady's contact in my email. So feel free to talk to him. He's a very nice guy. He's a good friend of mine, and I'm sure that he can help you out. If you have any real estate question, you contact me. And also, October is coming. October's almost to the end, and we will have a market report coming up at the beginning of November. So just expect that email from me as well. Thank you so much for your time, Brady. I really appreciate that. You take care.
My pleasure, Eliza.
Bye-bye.
Bye.